All right, morning everyone. It's a beautiful spring day here in the Midwest. It's a little bit cold, but the sun is shining. It's Monday, May 4th, 2026. My name is Joseph Blackland, and this is the pre-market morning report. So it looks like we got some activity in the market around 5 a.m. Central Time. Let's see what happened right there. So crude oil spiked pretty hard. Went from 103 to 107 up to 107.50, about a 400 tick rally in about 30 minutes. It came off right away, pretty much right away in the next bar. And we were up near the high that was made first, and the first resistance, the R1. So the high that was made first, that was on Friday. So we put in the high first, then we made the low on Friday. So that was the high made first. And we have basically been sandwiched in between the high that was made first and the low. So the low right here that was made, we have not really traded below this low. So the crude oil upward trajectory that was established last week is still intact. The bull is still in control of this market, and it looks like some sort of news headline or some kind of, story hit, because the stock market took a pretty decent hit around the same time as well. We could see that the NASDAQ market right here was hovering around the previous high, 27920 area. And right around the time that the crude oil spiked, the NASDAQ got smacked for about 200, 220 points. The ES is a similar picture, although the ES didn't really drop as much. It only dropped about 40 points, while NASDAQ dropped, 220. Tech stocks are a little bit more sensitive to these news headlines than the ES. And the ES hit the first support at the S1, 72.25, went through that briefly, turned right around, and now we're almost back to where we started the event. Crude oil has now come off, pretty much gave back the entire rally. So we have a news reaction, headline sort of, maybe Trump social media post or something of similar caliber to move the markets like this. This is the typical pattern that we see now. We see the crude oil go up, we see the market go down. Gold went down as well. We see the crude oil go down, we see the market go up. It's an inverse correlation relationship with risk assets and the price of crude. So I had Gemini pull a couple of news headlines to see if there was, anything that popped out. It doesn't look like there was anything major. It's just a similar narrative that was established yesterday and has now carried forward in today. So this is a pretty good synopsis of what's going on here. The market reaction this morning has been a tug of war between optimism over potential de-escalation and the immediate reality of a high-stakes military operation in the Middle East. That's pretty accurate, because the market is hoping that this gets figured out relatively soon. I don't understand how this could actually be solved relatively soon, given the severity of the situation and the complexity of the entire situation in general. That there are a lot of moving parts here. What this all boils down to is that there is a 13 million barrel, roughly a day, shortfall of the supply of oil that's being produced and distributed to the world. The world is continuing to consume crude oil at its normal rate, but with the Strait of Hormuz closed, that is not nearly what's been able to come out of there over the last 6 to 7 weeks. So we had a normal supply of crude oil, supplies, fertilizer, you name it, coming out of there, and almost none of it is coming out of there anymore. So this is providing a consistent and cumulative draw on supplies, particularly crude oil and gasoline. We see that the gasoline market has pretty much figured out that this is not going to stop anytime soon. That this rally is powerful. It began right when the war started, and it's on the high. ever since the war started. So whatever the news wants to tell us about the price of gasoline, that these prices are going up. It's $5 a gallon here in the Midwest, and we have some of the lowest, most competitive prices in the world. And if it's $5 a gallon here, it's going to be much more expensive everywhere else. So that's what's going on with the gasoline. The crude is, making more attempts at 110. We initially hit 115 in the first week of the war. Then we came back up there, almost hit it again, and then got smacked pretty hard. Went into a downtrend for several days, a couple of weeks, and then now we're back up here. This is the third time we're back up here. So something's definitely got to give here. The crude oil price is not going to hang around $100 forever with a consistent 13 million barrel a day deficit in the normal supply of crude oil. There's already fuel rationing and already more extreme measures being taken to deal with this in other countries. We're somewhat insulated from this in America because we can produce our own oil, and we happen to have the convenience of the world global currency here. So everybody needs dollars. Everybody can transact in dollars. If you want something, you can always pay American dollars for it. So that's the world reserve currency status that's still in place here. And some people think we're going to lose that. It doesn't look like we're going to lose that anytime soon, but it does look like that our dollars might not purchase much of anything if the world continues to go the way it's going, with lots of inflation and now this, war that's broken out in addition to the other wars that have been going on for several years now. It was in 2022 when the Ukraine war started. That's still going on. That there's other conflicts that are still flaring up here and there. It doesn't seem to have any sort of end lately. The consistent conflict and consistent inflation that we're seeing in the marketplace. So this is definitely going to be an interesting trading day. Is the crude oil going to go up to 110 finally and get through there? Are we going to have some more hope and negotiation, peace talk sort of headlines that are going to send the crude down 10 or 15, 20%? Is Trump going to be able to fix this problem in a short amount of time? Because we're definitely running out of time. We definitely cannot just keep the Strait of Hormuz closed forever and not see a more major impact on the price of oil and everything else. So my trading plan is going to be to wait for the technical signals to show up on the chart and then use good solid entry methods, risk management, and math to try and navigate my way through here. These news headlines are going to be rather problematic. They're going to be unexpected. They're going to be surprising. It's going to be an interesting week. So I'm going to stop the video for now. Thank you guys for joining me. Hopefully I will get some good script demonstration videos together. I was having a little bit of trouble last week, but this week I've got some new software in there and I've got a more stable connection. So hopefully I will be able to get some good footage of the script trading the market. So until then, good luck out there. Keep your eyes on the ball, and I will talk to you soon.